Hi, Tony here. With US equity markets closed on Friday for the Juneteenth holiday, US equity markets enter the home straight for the second quarter in solid shape, albeit with some clear deceleration in June after the strong gains seen during April and May. Now, looking ahead, the biggest risk to continued outperformance by US equities into Q3 appear to stem from three main sources. Firstly, a more hawkish Fed. Secondly, fragility in the Middle East ceasefire. And thirdly, a higher bar for tech stocks. Now, given the first point about a more hawkish Fed, which stems from last week's more hawkish FOMC meeting, this Thursday's May core PCE inflation release will carry added weight. Let's take a look at the charts of the NASDAQ and the Dow Jones to see how they are lining up at the start of this new week. Right, so this is the rally which took the NASDAQ 35% in about 9 weeks. And from that point, we've seen a correction commence. The correction has held support initially coming in around 28,000, just ahead of there, before it bounced back up towards the record high. Whether the correction is complete at this low and that we're just going to see the NASDAQ continue higher, or whether there is more of this zigzagging type corrective price action to go is unclear. But what we can say is that while the NASDAQ holds above support at 28,000 on a sustained basis, the view is that once this corrective price action is over, that we will see the NASDAQ resume its uptrend up towards 32,000, maybe 32,500. If, however, we were to see the NASDAQ see a sustained break below this support coming in just above 28,000, then there's definitely scope for a deeper pullback, given the extent of this rally, potentially back towards 27,000. Now, for the Dow Jones, what you can see is a rally of around 15%, which took us up to this 51,665 high 9 weeks later. We then got a nice pullback into support around 50,000, huge psychological level there at 50,000, before another fresh record high. Now, at this fresh record high, which the Dow Jones struck last week, you can see there is evidence of bearish divergence. Now, what that means is you're seeing price make a new high here, but the RSI is failing to confirm. And of course, this was something we spoke about a few weeks ago back here when the NASDAQ was running higher, but the high in the RSI wasn't able to break above the preceding high. So that was what we called bearish divergence. We warned about the risks of chasing this rally, and then we got this 8.5% pullback. So it doesn't necessarily mean that we are going to see a pullback straight away. It could take days, potentially weeks to play out. But what it does give us is the information that the rally is becoming stretched and that the risks are becoming more dangerous chasing the rally, and that a pullback is potentially shaping. So for me, I'd love to see a pullback in the Dow Jones back towards 50,000, having now identified this RSI divergence. Let's see how it plays out. Stay tuned for more market updates ahead.